Hi there, a very good morning and good evening to all of you, depending on wherever you're watching me. This is Simply Stocks, and I'm live with another live session, the Sunday session, which is now happening in evening. So today it has been an extremely, you can say, forlorn, sad day for Indian investors because of the kind of news that crept in early morning. Uh, we all knew that he was not well, but the eternal bull is no more. So it came as a shock even after the news that he was not keeping well and there was a lot of issues with his health. But we had hope that things could just chug along uh, as it was going on, and he was present at a press meet when Akasa was being launched just a few days back. Not keeping that well, but was in very good, was in decent spirit. So a person who started investing like a common man about 40 years back, and even if I take, you can say, uh, into account his loans that he took from his, I think, brother's friend or some other or a lady at that point of time. I don't remember correctly, but around 10 to 15 lakh rupees that time, plus whatever he had with himself, 5 or 1,000 rupees. He started with that, and even if I take that amount, it's not that huge compared to the kind of wealth he has ended up creating up till now of I think over $5 billion or so, so around 40,000 crores or so as a net worth of today, or investments, and all this amount through trading, investing, intraday trading, everything, speculation, and so on and so forth. uh, there are, you can say, a lot of people who talk about him doing a lot of hanky pankies and other things in the market, but that is part and parcel of everyone who is very close to the ring from that point of time. But what he has achieved over the last 35, 40 years, I don't think anyone would be able to do, at least in the context of the Indian market, because he changed the mindset of individuals like me and individuals of the 90s who were growing up in the 90s, and who has grown up taking markets over the last 10, 15 years, about the fact that this market can create wealth for a normal individual, for a general individual here in India. So that cannot be taken away. The kind of, you can say, uh, professionalism, plus being the way he was absolutely bullish on the market, on the Indian story all the time, was absolutely unprecedented, and he was virtually right on all the occasions. So I believe that it would be, and this will be, a huge loss for the Indian investing fraternity, because whenever the market used to fall 25-30%, be it during the financial crisis of 2008, we had an economic crisis in 2011, whatever I remember of when I have followed the market. I'm talking about that. Before that also, he would have come out all guns blazing in support of the Indian economy. But in 2008, 2011, in real troubles of 2013, when the global markets went through a phase of very difficult time for 1 2 years, and then we had that stupendous rally in India from 5400, 5300 on the Nifty. So all throughout, this has been uh, a journey in which Mr. Rakesh Jhunjhunwala has helped a lot of retail investors, a lot of small participants, to keep their faith in the market and to keep their faith in the investments that they have done. And probably if they are not diversifying, they are not doing any sin. So uh, I feel that things will not be the same again as the markets open up on Tuesday. And he has left behind a huge legacy. So some of the things that I remember from watching his interviews, never got the chance to meet him, which was also a sad thing. But some of the interviews that I have gone through, and you would have also, and read about him. I believe that you will not find anyone who will just stick his neck out and talk a spade a spade. So he talked about one of the food delivery companies that came out with an IPO and did extremely well initially, as to why that company should not do well, and probably over a period of time we'll see that where its place would end up being. And we've seen what has happened with that. We have seen the way he hedged his bets, and the way he went ahead in the early years and betted for something like Sesa Goa. Eventually that has become Vedanta, and made a lot of money, and then went on to put in, you can say, investments in three four stocks because he had lesser money, to build wealth through trading, through intraday trades, and through short term trades, and then eventually put all that money again into the market by buying stakes into mid cap smaller companies, and then holding them throughout the time. We all know about the story of Titan of his, as to how he's bought that stake, and in 2017 he had, I think, around 7,500 crores a net worth, total net worth, and only 7,500 crores were coming from Titan. So, astute investor knew what he was doing, and was able to articulate and probably communicate as to what he felt about the markets, and he was very candid about any sector, stock, etc. To individuals, to normal individuals, you can say the general public, and he did come on to the general public platforms time and again, and talk to normal retail investors as well. So a huge loss for the Indian stock market fraternity at that. So, all right, guys. So, today's session will be around, you can say, one of the sectors, or if I may say, stock that has come out with a very decent set of numbers. And I normally do not talk about this space, so wanted to talk a little bit about it. That if somebody wants to get into this space, then one or two companies do exist that should do well. And plus, we'll talk about the markets as well as. Will answer your queries. So, hi Ashim. Uh, Rakesh, a very good evening to you. Today I want to talk to you about the recreational space. This is a space that has been ignored over the last 3 years, that has really got the brunt of the shutdown that has taken place. And now we are seeing, I was looking at some of the numbers, and in Wanderella holidays, I've seen a huge jump in you can say sales, and sales have grown by something like from about 100 crores to, I think, 4,400 crores or something like that, 3 4x on a year basis. And profitability, the company was in losses, came into profits this June. And normally the June quarter is the best for this industry. So September it will wane down, March will begin to see better numbers, and then June will again be pretty good. So uh, the kind of numbers are something like Wanderella has produced, or the kind of numbers that Mahindra Holidays is ending up producing, it looks like that we are in for a good move in these companies, in these sort of stocks. I've seen, so Wanderella was up 7.5% uh, on you can say uh, Friday. So it was up 7.5%, and from 240, the stock is already at 360 over the last 2 weeks or so. So it has gone up 50%. So be extremely careful buying straight away. But if you just look at, you can say, their numbers, unbelievable numbers. So from around 2 3 crores of sales, it's come to 150 crores of sales, a profit of 64 crores versus, so that's a net profit of 64 crores versus in June of last year, it was a loss of 15 crores. Another thing is that in June of 2019, it had a profit of 42 crores and a sales of 118 crores. So things are coming back big time. Even from June 19 numbers, we are seeing a 25 27% a jump in sales and a 50% jump in profitability. That tells you that probably revenge traveling and movement is taking place. But overall the numbers has have come out pretty significantly much better than what probably I have envisaged and many would have. Now, when to buy it or how to go about buying it, I would say that those who are holding on to stocks in this sector from the last 2 3 years should keep holding, because there is a decent up move that is possible. Now, if somebody really wants to buy, so from, say, in the case of Wonderla, from 230, the stock has gone to 360. It's up 120 rupees. It may go to 400 or so, or 380. So 150, 160 rupees up move. Wait for an whatever 50% decline of that up move. So if the stock goes up by 160 rupees to 390, wait for an 80 rupees fall and then probably look at buying into it at around 300 levels. So uh, that is where you need to buy. Wait for it to consolidate or decline sharply in a major declining market, and that is where you should end up buying into the stock. But I think this sector could end up doing even better, I mean, in the next Jan to June period. So probably not now, but over a period of time, when you get opportunities, you can definitely buy something here. Mahindra Holidays and Wonderla Holidays look pretty good in this segment. If somebody uh, is willing to buy into hotels, then Lemon Tree and you can say Indian Hotels fits the bill. But I don't look at that you can say section of the sector that fondly. But yes, the kind of number Wonderla has come up with looks pretty good. Now, coming to the market, I feel that the market is now over exuberant, yes, because of heavy FII buying. And if the FII buying continues, probably the market will continue its upward journey from 18,500, 600 to even higher levels. But having said that, I feel that there could be a chance of a correction, and that I have been telling time and again, over the next 2 weeks, we could see a decent 5 to 7% correction. So I won't suggest that somebody buys a fresh big time unless you have stocks on your mind and prices are even lesser. There are companies in which the stock prices are still down 30 35% from the top, and the numbers are good, but you have to find them. Otherwise, if they are making new highs, stocks are making new highs, then it's better to avoid, because we are really heading towards a greed phase of the market. If the market goes towards 18,000 immediately, and which it looks like the way the US markets are behaving, that we could see 18,000 very quickly, probably in next week. And by Wednesday or Thursday, we could be at 18,000. So be a little bit careful. If you have bought earlier, then it's time to book profits in some of your positions and stay in cash. So kindly do that rather than investing fully at these levels. You may see a 700 to 1,000 point decline, and that is where on the Nifty I'm saying, that is where probably some of your stocks could be down 10 12%. So for example, and this is not a recommendation, but Wonderla may go to 390 and then correct around 12% from there. And that's exactly what I'm talking about. 12% from 390 would be around 310 or so. And that would be a more comfortable level to buy into on declines, and if the stock has gone down that 70 80 rupees, rather than buying at 370 380 and then seeing the stock go down. So that's exactly my point. I'm not saying that we are ready for a crash or something, but things could be up and down this month, and from next month or mid of September, things could be smooth sailing going up rather than the other way around. All right, so I'm ready to answer your queries for the next 6 to 10 minutes. Can I use the super chat and super sticker feature? That will help me go down. That will help you also ask me questions and eke out answers in a greater detail. See, Tata, like, see, Abhijit, fresh entry level is around 8,000. I won't suggest you get in now. This is exactly what I'm trying to tell, is that the market is exuberant on many fronts and there could be a correction that awaits us. So that's why So Tata Elxsi is a buy around 8,000, not at these levels. So Dr. Lal Pathlab is a long-term buy, but the kind of numbers that is producing, Ashim, I would suggest that if it is possible and you can book out of it, you should probably get out of it and get into other kind of, you can say, consumer related, direct consumer related stocks, festive stocks, or auto ancillaries. Even auto ancillaries are producing pretty good numbers, so you can probably look at that as well. Okay. So Baljit, I have not looked at movies, not a movie buff, so I won't be able to comment on it. Probably others on the panel may help. So really not into movies at all, so I haven't seen that. So Aarti Industries, I've just looked at Rakesh, the stock, and it has come into focus. I guess it might come into the watch list, or it might have just come into watch list now. But Aarti Industries do look good with the kind of numbers that it is producing. I would say that if you really want to buy, probably buy around 2000 or so. I won't say that. You should get in immediately, but the kind of numbers that the company is producing, it's a long term hold if you have the stock. So that's my call on artist. So I'm saying 2000, I'm sorry for that. You should get into the stock at around 740, 750 levels. On a slight decline, it is moving higher from where it used to be, the lows that it has made. The numbers are good. The stock has come down sharply. So around 770 is a good level to get into it. In terms of numbers and other points, it looks pretty decent. Yeah, the margins have dipped, but margins have dipped for many companies. I think the numbers are decent enough. It's a long-term hold. So that's the call. Santosh, thanks for your contribution. What's my take on Hindware? See, the results are decent. I won't say results are extraordinary or big or very good, but results are pretty decent. It's a hold at these levels. I can't see it go below 270 to 80 that easily. I still feel that by 24 end or by 25 mid 2025 we could see the stock closer to 1200 rather than where it is sitting at. The valuations are very attractive for the company, for the kind of business that is doing. If you really compare it with its peers, something like an Acresil or other kind of companies, yes, I know that numbers are much better there, but there's a huge valuation gap in that respect. So yes, it's a hold if you have it. If you don't have it, don't get into it. There are other companies from a 3 year perspective that you can probably get into, but if you're holding on to it, it's definitely a hold. So I've talked about many auto ancillary companies. We have the endurance techs of the world, Jamna Autos. There are others. So you have to look at auto ancillary companies that are producing extraordinary numbers, and numbers which are 80%, 100% higher compared to last year, or even more compared to last year in terms of sales and profitability, likewise 60, 70% higher, and you will get some there. So that's the call. Avoid companies in the Europe region if it has a lot of exposure in England, UK, Europe. But other companies, India based, Indian centric auto ancillary companies are definitely a buy. So Tata Chemical, decent numbers. Stock has run up. It's a buy around 1080, 1070, 1080, 1070 is a good level to accumulate Tata Chemicals on. See, very decent company. Again, the stock has run up, APL Apollo. So I would say in decent corrections of 10 to 15% one can accumulate. Long term, it's a definitely a hold kind of a stock. Devi's Lab is a stock that can give you 18-20% CAGR over 5-6 years. It's not a company where you can get very fast huge returns, so that's the call. Otherwise, decent company to get 18-20%, 17-18% yearly. So that's the point. So EPL, I have looked at the number, not that great. I would say it's an avoid with the kind of numbers it's producing. I think look at larger consumer related companies. I have not looked at Repco Finance, so will not be able to comment on it. FL has come out with very decent numbers. Now the stock has run up. If you are holding from lower levels, hold on to the stock. Next target could be 1450, 1450, 1500 over the next 6 8 months. If you have not bought into it, wait for levels of 1050, 1030, 1060 in declines to get into it in that sense. All right, guys. Thank you. Thanks a lot for being online. Please like and subscribe my channel and hit the bell icon so you get my videos straight away when I post it. And kindly support me on Patreon. Thanks a lot for watching.